everyone. I think today is the day of the grand finale. I hope that this will be a great session today. But I'm absolutely sure that and confident that you had a fantastic time and a very interesting and a learning experience during this time that you have been preparing for this day. But I really hope and I'm sure you find this experience extremely rewarding. Let me take this opportunity to thank all the people that were involved in the organization of this event. I'm sorry, it's quite an extensive list, but I think it's fair to thank everyone, and you really will get a grasp of how complex the organization of such an event is. But I feel I must do it because it really requires so much involvement and enthusiasm from so many people. First of all, thank you to Patricia Pinto and Catarina Sousa Vieira from Sonai, our company that was the target of this of your analysis today. It is very good to have you so much involved and providing so much feedback and information to our candidates and to our students. So really, thank you from our hearts for your involvement and in this initiative. Thank you to our jury, Cristina Brízido, Jorge Guimarães, and Felipe Rosa. It's really important your role today. It's very difficult. It's a very difficult task that you surely have today. Thank you to our graders, Pedro Baldaia, João Calado, and Gonçalo Garcia. It is very important your work during. It's very important for this day for coming for having your work is very important for this day. The mentors, I think they play a key role supporting the teams. So special thanks to António Celadas, Nuno Estácio, Teresa Correia, Rina Guerra, Nuno Matias, and Diana Oliveira. And of course, the faculty advisors. It's very good to have you on board, and your involvement with the teams are really important. So special thanks to Pedro Pinheiro, Nelson Arial, Professor Tudela Martins, Gonçalo Somar Ribeiro, Vitor Barros, Pedro Leite Inácio, Sónia Silva, António Miguel, and Jorge Farinha. And finally, a special word for our internal mentors of this event within our CFA society, Sandra Costeira and Miguel Maia. You always rock on this on organizing and delivering this event, and Pedro Barata, of course, always present and always playing a key role on this event. So. Thank you very much to all of you, and the best of luck. Today is the day. Do your best, and the best of luck to everyone.
Okay. So, thank you very much, Marcos. We can begin. Before the begin, just two comments. Yesterday night we sent an email that we will show this live event on Facebook, but unfortunately it's not possible because only one reason. It's if we put this on Facebook, you can assist to the to the sorry, I missed the word. If you put this on Facebook, you can assist to the presentations of the other teams, and that it's not allowed. So unfortunately, this option it's not available for today. Anyway, this session will be recorded and we'll put later on our social medias, and you can see and can show to your friends and colleagues. The second comment that I was to mention, I forgot. Sorry, because this is a lot of things. What was this other thing? The other thing is you will receive the certificate of being on this competition. The certificates will be sent to your faculty advisors. And these are the rules. We have a small issue with one of the juries that he has some technical issues, and he can't connect yet. So we will wait 5 minutes and try to solve this. We will send you now for your breakout rooms. So for a couple of minutes, you won't see anything. We will begin with team 1 and then team 2 and continues. As you know, it's only 10 minutes for presentation and plus 10 minutes for Q&A. And that's it. So are you prepared?
Good luck. Yeah, we are.
Yeah.
Okay, so I will press the button and we'll begin the 10 minutes, okay? Good luck.
Okay, thank you.
Thank you.
Okay, hello everyone. We are delighted to present our company analysis for the Sonai SGPS today as part of the CFA Research Challenge. We are Celia, Felipe, Francisco, and myself, Yannick, and we submit a buy recommendation with a target price of €1.21, which equals an upside of 81%. The qualitative characteristics like the strategy and diversification of the company, as well as the quantitative factors in form of business valuation and financial analysis, show us a strong holding company. In the following, we will justify our conclusion.
Founded in 1959, highlight that it was not until 1965, with the hiring of Belmiro de Azevedo, that Sonai was able to diversify its production. Major shareholders since 1974, the date is of special importance, namely, with the emergence of Sonai Investimentos SGPS SA in 1983, the opening of the first hypermarket in Portugal in 1985, and the surprising launch of public offers for sale on 7 of the group's companies in 1987. From 1997 to 1999, emphasized both the release of Ótimos and the inauguration of 3 shopping centers in Portugal. Finally, already in the new century, point out Sonai's takeover bid for PT and PT Multimedia in 2006, and the strengthening of Sonai's MC leadership in Portugal from 2007 onwards. At the present day, Sonai has in its portfolio 8 business segments denoted by different subholdings, which range from the food retail through Sonai MC to telecommunications by NOS. And hence, in specified retail, Sonai Fashion, Vorten, and ISRG, which operate in the clothing, electronic, and sportswear retail, respectively. Regarding the business units that coordinate financial services, shopping center management, and portfolio management, Sonai has accordingly at its disposal Sonai FS, Sonai Sierra, and Sonai IM. Focusing on the shareholder structure, it is clear to observe that the majority of Sonai's capital is detained by FNOR, the reference shareholder. Since this company is not listed on the stock exchange, it makes Sonai, in practical terms, protected from an hostile takeover bid. Regarding sustainable development, Sonai carries out some initiatives, aligning with decarbonization trajectories, the preservation of natural capital, or the combating of plastics use. Some practical examples are, for instance, the backhauling program, a partnership within the firm and its suppliers that seeks to decrease the number of kilometers that trucks make on empty, the adoption of more sustainable fishing practices, verifiable in Sonai's MC latest project regarding aquaculture, or to ensure that by 2025, 100% of Sonai packaging brands are reusable, recyclable, or compostable. With respect to research and development, Sonai maintains innovating in a sustainable climate, and the evidence relies on the magnitude of the firm's financial investment since 2005. Nowadays, a good example of Sonai investment in tech companies is, for instance, Arctic Wolf Networks, that has just gained a unicorn status with a valuation of $1.3 billion. In financial terms, this was translated into a capital gain of 29 million euros for Sonai IM. I will now pass it over to Filipa, who will make an industry overview.
As Singapore, Sonai has a really diversified portfolio of businesses. Like so, we will analyze the retail, real estate, telecom, and financial services industries. First, the retail industry is expected to grow, but slower than in previous years because of the pandemic. Another challenge for this industry is the fact that that people usually like to buy in store because they can touch and feel the products, but right now they can't, so they prefer to buy online, which is a very good opportunity as well if you are considering online stores. This industry is very competitive since there are a lot of retailers that serve the same areas and carry the same products, so consumers can easily switch between companies. In Portugal, the leader is Sonai, which has been benefiting from its diversification in periods of economic downturns. Next, the real estate industry is strongly correlated to some macroeconomic trends. For example, when the interest rates decrease, there is an increase in the investments made in this industry. Also, here prices tend to be similar and buyers usually analyze alternatives before deciding. This industry also requires high investments, which are further increased due to taxes and additional costs to legalize the construction. One last note is that a very efficient way of being less dependent on suppliers is to be vertically integrated, which is the case of Sonai. Next, the telecom sector comprises all companies that transmit data. With the era of digital, this industry expects to grow. Also, with the pandemic, people now spend their day online, which is a very good opportunity for these companies since they are the ones that provide services that allow people to do this. This is a highly concentrated market, so competition is intense. Also, the technology required is very expensive, which makes it harder to get in or out of this market. In Portugal, NOS is the second biggest company, but in the entertainment segment is the biggest one. Lastly, the financial services industry connects entities with extra money to those who need it. This industry depends on consumer confidence as it is positively correlated to consumption levels. However, traditional companies are facing now more threats since, for example, telecom and technology and retail companies are starting to offer financial services to their clients. Nevertheless, this industry is expected to grow. Lastly, this industry requires an expensive initial investment, and also reputation and security are very important for the buyers, which favors already established and older companies. I will now pass the word to Sally.
We will now explore how we valued Sonai and how we reached our price target. We used two models, the discounted free cash flows model and the dividend growth model. For the discounted free cash flows model, we made several assumptions, many pertaining to each specific industry or business, and many also to account for effects of COVID-19 that we expect to be felt until at least 2022. We estimated a weighted average cost of capital for each of Sonai's businesses and its portfolio, except for Iberian Sports Retail Group and NOS, which were respectively valued through a multiples approach and net current prices. And we ended up with the enterprise values that can be seen in the table that is presented on the slide. When it comes to the conglomerate discount applied, we used the values that were given to us by Sonai for its minimum, average, and maximum applied by analysts. The consideration that we made was when using a positive conglomerate discount, we would not include the holding business cost center that we valued and that has a negative enterprise value in the sum of assets of Sonai, because we consider that it would be undervaluing the company, since in the conglomerate discount there are already the costs that are related to the conglomerate business in itself. By doing this, we ended up with prices that give us an upside potential between 67 and 90%. Finally, when it comes to the dividend discount model, we reached a price considering a dividend growth rate of 5%, as is Sonai's plan. We reached 1.10 euros per share as a price target, which also commands a buy recommendation. So from all our calculations, we always reached a buy recommendation.
Regarding the financial analysis, we needed to have an idea with which rate the overall business grows. Therefore, we estimated the growth of the sales of the company. Then we used a growth rate of 5.21% to transfer this growth to the turnover, capex, and investments, depending on the previous relation of these figures with the sales. This way, we had a reliable, stable amount that gives us a direction of the upcoming years. Having these, we continued forecasting the balance sheet, the income statement, and the cash flow statement. Due to the given growth in sales, the overall turnover of Sonai will grow constantly over the next 5 years too. Furthermore, the EBITDA is growing constant as well. Knowing these figures are growing, the cash reserves are growing as well, since there are no bigger new investments planned yet. Even though the interest coverage ratio declined to around 3, this is still a very good value. Having a look at the balance sheet and income statement, we can see that Sonai was able to keep the growth stable, even during the tough Corona times. With its business model, the retail and online shops, Sonai is not as heavily affected by COVID as other companies. Overall, we conclude that Sonai is a stable and growing company. Last but not least, the growth is also visible in the profitability of Sonai. Most of the rates are stable or rising. The earnings per share as one of the most important rates increases from 0.09 in 2020 to 0.13 in 2025. The return on assets and return on equity are declining since we assumed quite a constant rate of debt while the assets grew more over time. Sonai is aware of the potential optimization of the profitability and therefore is thinking about changes in the fashion unit and higher investments in the e-commerce and online business.
Finally, we would like to address some of the investment risks that we identified, and we would like to focus your attention on one which is particularly relevant for Sonai as a conglomerate, and also on ones that are relevant right now because of COVID.
1 minute.
Thank you. So COVID, as we know, is a bigger risk even because of its uncertainty regarding its evolution. So we would like to direct your attention to strategy and portfolio, since as a conglomerate, the managers at Sonai must be careful with diversifying their portfolio and guaranteeing that there is maximization of shareholder value. This is always a concern when investing in conglomerates. And relating to COVID-19, we focus on demand, supply, and human resources as sources of risk from COVID-19 because demand, the turnover is expected to either decrease or stay lower as it did in 2020 for almost all assets in Sonai's portfolio, except for maybe Sonai MC. Supply, because new measures are in place right now for the delivery of products, there is a possibility of closed borders, or even suppliers can go out of business, which command costs to replace them. Finally, human resources can be a source.
Time out. Sorry.
Sorry.
Sorry. Thank you. So now the jury one wish. We can begin with one question. As soon as we begin, I will start to count 10 minutes.
Okay.
I think the jury can have some time to prepare between themselves and organize between themselves if they want to. If they want to.
And how should we do that?
The jury. I don't know. Do you want to go on sequence? Meaning, first question would be Christina or Philippe?
Yeah. Okay.
Yeah, we can do that. Yes.
Yes.
And then we can have that conversation afterwards.
Exactly, outside of the presentation in the team. Yes, that's correct.
Well, I can start by I can start by asking. You mentioned DCF. You mentioned the dividend discount model. Can you elaborate a little bit on your thoughts on valuation according to market multiples?
We did not use market multiples in our valuation, except for Iberian Sports Retail Group, where we used a multiple approach, where we used enterprise value over EBIT. There were some considerations regarding Iberian Sports Retail Group, mainly because it had a negative EBIT for 2019 and 2020. Only in 2018 did it have a positive. Only in 2019 did it have a positive EBITDA. So we used that as a sort of normal year, because 2020 of course wasn't a normal year, and if we did just an average, it would give us a negative EBITDA. So we considered that would be the best thing to consider.
Thank you.
Okay, thank you.
Philippe, go ahead.
Oh.
Okay, so if Philippe is not okay, I'll start and then I'll leave the floor to Philippe. Sonai is sometimes seen as a conglomerate because it has several activities. How do you believe that should be dealt with by investors?
I'm sorry, what should we do?
So Sonai is sometimes seen as a conglomerate, meaning it's one company that has several and distinct and different business units. How do you believe that investors should look at that? How the investors should value a company with different business areas? and very different between them.
Maybe I can start with the answer here. Obviously, Sonai has a very big diversification, so it's investing in very many different sectors. And I think, especially during these times, we can see that this is a good point because the times were quite tough, and it is good that Sonai has a diversification, which makes it more interesting to investors. And also, Sonai is developing. So, for example, they are thinking about the fashion sector, whether they are the correct holder for this kind of business or whether they are not. Plus, for example, they have the chance to adapt on some steps and go more into the online business or the e-commerce when they see, okay, this is developing well and this is not. So they have the chance to rebalance and see how the portfolio might work best out for them. And yeah, this is what we see as an advantage as well.
Do you consider applying a conglomerate discount to your valuation?
I think that investors seeing that Sonai does have a panoply, I don't know if that's the word, it has a group of businesses that it holds. So there are costs that are associated to maintaining this network of businesses. So I think we did try to make that consideration in our evaluation of applying a conglomerate discount, because in fact they have more costs than just a single company because of holding all these assets and having to maintain and diversify the portfolio and all of those operations. And so, yeah, I would agree that a conglomerate discount should be applied, or at least that these costs must be taken into consideration when performing the valuation.
But you did not do that.
We applied, so this is what we did. When we looked at the financial reports of Sonai, we noticed that there was an account that was for other businesses, which we noticed was a source of costs for Sonai. So when we applied a 0% conglomerate discount, we included those costs, we value those costs as a business unit, as a cost center for Sonai, and we included them in our valuation to account for those possible costs that exist because of Sonai having to deal with those multiple businesses. When we applied a positive conglomerate discount of 13% and of 20%, which were the values given by Sonai for the average and maximum applied by analysts usually, we did not account for those costs because theoretically that conglomerate discount already incorporates those costs on its own. So we applied the conglomerate discount and did not apply that negative asset value. I don't know if I'm being clear.
It answers my, it answers my question.
Okay. So sorry, I stopped the time. There is a problem with the connection of Felipe Rosa. The time it stopped at the moment. I will leave the room, but I will return. Sorry for this.
Okay.
Sorry for this. I think Philippe is watching, but he can't speak. There is some issues. I suggest for the other juries to continue with the questions.
Yeah. Okay.
Okay. So I will continue now the time. Okay.
Okay.
I have not any more questions from my side.
Thank you.
Regarding your ESG analysis, what would be the main aspects that you would point to Sonai to improve?
That's a good question. Sonai has been implementing a very important project regarding ESG objectives. I think, as you know, Sonai has implemented the Sustainability Advisory Group of Sonai companies in order to provide and register its fulfillment regarding these objectives. Sorry, that are moreover aligned with the United Nations sustainability goals, and are the following: CO2 and climate change, nature and biodiversity, plastics, community supports, and inequalities and inclusive development. I think one that Sonai can improve, it's in nature and biodiversity, because in CO2 and climate change, it has a number of very important projects, such as, for instance, the installment in 2019 of 16 new photovoltaic plants in order to provide energy to its retail structure, and also the backhauling program, as we presented in our presentation. So the biggest improvement that Sonai can make, in my perspective, is regarding nature and biodiversity. Here, there were some projects that Sonai did, but in my opinion, they can be improved, such as, like, for example, the donation of 21,000 trees in 2019, or, for instance, the program Escola Missão Continente, that has educated to 32,000 children. So I think the biggest improvement can be on nature and biodiversity.
Okay. Now I have a question from Felipe Rosa. He put me on the chat. I will read. What is the business of Sonai where you see the biggest valuation upside for Sonai shareholders?
I think maybe Sonai MC is obviously a big source of value for Sonai. I think it was seen right now during the pandemic that it is a business that is resilient, and it was able to hold its own during these difficult times. But I think that as a result of Sonai, we may see that maybe Sonai IM and even NOS can become a more valuable asset, since now, because of all this whole situation, I think people are more connected with technology than ever. So maybe those would be good businesses to invest as well right now. But of course, Sonai MC is probably the biggest, is the biggest source of turnover for Sonai as well. So I just think that maybe the technology-based businesses might be also a good investment right now. And it's the advantage of Sonai. You're able to invest in more than one sector of business, which is obviously an advantage, I think.
Any more questions for the jury?
Not from my side.
Not from my side.
Okay.
Oh.
So, okay. In that case, just confirm with Flip. I have the time stopped, so don't worry.
Of course.
No. Okay, so let me hold on. So okay, we are done. Thank you very much. Sorry for this some issues with technical issues.
It's okay.
I love when we do this live again because it's much more relaxed.
Yeah.
Yeah.
So thank you very much. You are finished. We will speak later. Okay.
Okay.
Thank
you so much.
Thank you. Congrats.
Thank you.
Hi everybody. Are you prepared for begin?
Yes. Just before we begin.
As soon as you begin to talk, I press the button with the 10 minutes, okay?
1 second, just 1 second. We wanted just to ask if you could put like the gallery view.
Okay. Let me try. Now it's better? Does it work?
I think yes. Thank you very much.
Okay. Okay. So when you begin to speak.
Good afternoon, ladies and gentlemen. My name is Rodrigo, and these are my colleagues Henrique, Guilherme, Margarida, and Mafalda. Today, we are here to present our investment recommendation on the Portuguese conglomerate Sonai SGPS, which stands at a buy with a price target of 1.25 euros per share. representing a 77% upside potential from the January 14 closing price of 71 cents. Our recommendation is based on three main drivers: diversification, sustainability, and solid cash flow generation. Going back in time, in 1959, Sonai was founded in Porto and has evolved to its current diversified portfolio. Today, Sonai is all around us. They feed us, they clothe us, they supply us with all the electronics we require, they invest in the telecommunication industry while also offering us shopping centers in landmark locations. Lastly, financial and investment management services complete Sonai's vast business portfolio. Its diversification allows Sonai to foster synergies between its business units. The strategic location of its stores, inside Sierra's shopping centers, is a prime example of this because it promotes cross-spending between its brands. Additionally, the loyalty program, currently the biggest one in Portugal, contributes to making Sonai an ecosystem of companies that complement one another. Now, Margarida, can you walk us through Sonai's ESG?
Well, we believe Sonai's ESG policies create value not only for their shareholders, but also for the environment and for the community. We start by highlighting the company's efforts to net its carbon footprint. In the food retail segment, Sonai has already received international recognition for its management of reusable and recyclable plastic. This focus can be extended to the social field. Following the COVID-19 pandemic, Sonai offered support to health and security professionals and donated hundreds of computers to schools in an effort to reduce social inequalities. In line with its sustainability strategy, Sonai has been refinancing its debt through ESG bonds. Starting in 2020, we ran a linear regression and we concluded that the relationship between ESG score and cost of debt has a statistically significant negative correlation. Our analysis supports Sonai's commitment to ESG causes and allowed us to incorporate ESG in the valuation. A considerable part of Sonai's success can be attributed to the Azevedo family. Nowadays, Claudia and Paulo Azevedo, highly trained and experienced professionals, assumed the role of continue their father's legacy, controlling Sonai through a Fanor Investimentos. Sonai's board is composed of 10 members, with only 4 being independent. Nevertheless, the shift towards green bonds shows the company's efforts in improving these shortcomings. Sonai clearly demonstrates this ambition by having as a KPI for green bonds the increase of women in managerial positions. Now that we have looked at Sonai's diversified portfolio and ESG focus, Guilherme will explain us how we approach the valuation of Sonai's vast portfolio.
So, in order to fully capture the characteristics and risks inherent to each business unit, we valued Sonai through a sum of the parts approach. To further complement our valuation, we've also applied methods such as the dividend discount model and relative valuation. But let's start with the largest business unit, which is Sonai MC. Sonai MC is a food retail company. It has physical stores all over Portugal through its 3 subunits: hypermarkets, supermarkets, and new growth businesses. Each of these can be further divided into several banners. The company is also investing in the online space. A survey developed by our team in December 2020 shows that Sonai MC is a clear leader in this channel, taking advantage of the strong brand recognition it has. 56% of more than 1,100 respondents prefer MC's brands for online food shopping. Given Portuguese consumers' above average appetite for discounted products, our team also performed a price analysis, and we found that Continente has the most aggressive promotional strategy amongst competitors. According to our analysis, hypermarkets are not expected to increase in number of stores. Supermarkets, however, is implementing a clear expansion strategy, driving MC's growth mainly through proximity supermarkets. Lastly, new growth businesses, the subunit with the highest operational profitability, is estimated to drive the EBITDA margin of the entire Sonai MC upwards from 10.2% in 2019 to an average of 10.8% during the forecasted period. Now, to value MC, we took several steps. We started by estimating the number of store openings for each subunit. Then we forecasted sales per store based on historical figures, and going one step further, we created different levels of efficiency for both supermarkets and new growth business stores, since it might take up to 3 years for a store to become fully efficient. We then applied an adjusted sales per store multiple to each level to reflect those differences, and in the end, almost half of 2027's turnover is expected to come from supermarkets. Regarding CapEx, it is expected to increase at 2.6% CAGR from 2020 to 2027, and we expect MC to see its free cash flow to the firm increase faster at 4.9% CAGR until 2027. Summing up, this business unit represents 69% of the final price target. Rodrigo, what can you tell us about the other retail segments?
Well, Glenn, in the case of Vorten, we forecast their turnover based on geography and also split it between online and physical stores. For Sonai Fashion, we forecasted its turnover for each of its 4 brands separately. In the end, Vorten contributes with 5% to the final price target, while Fashion contributes with 4%, and both were valued using a free cash flow to the firm approach. But now let's look at Sonai Sierra, the commercial real estate business and the catalyst for Sonai synergies between the previous segments. Sonai Sierra is undergoing a transformation process by focusing more in the management of shopping centers, shying away from pure asset ownership. This will allow Sonai to increase its return on invested capital while decreasing its risk exposure to the underlying assets. In order to capture different business models and risks, we valued Sierra through an income method specific to the real estate and a DCEP valuation. In the end, Sonai Sierra represents 10% of the final price target, with 48% coming from assets under management. Now, Henrique will guide us through the investment in the telecommunication industry.
NOS is a public Portuguese company of which Sonai owns a 30.8% stake. Its business is divided into telecommunications, audiovisuals, and cinemas, with the first contributing the most to the company's success. The ongoing 5G auction might change the market share of NOS. However, we consider the company will be able to remain strong, maintaining its position as the second largest player. To capture the fundamental value of NOS, we use 5 different methods, starting with the free cash flow to the firm. All of them yielded consistent results, with an average price of €3.36, contributing 8% to Sonai's final price target. Now, let's look at the remaining portfolio. To value this, we use relative valuation. Together, they represent 5% of the final price target, with Sonai IM being the largest one. As Sonai has 8 businesses in different industries, we found important to compute a WACC for each segment. Values range from 5.7 to 6.9%, NOS being a special case considering its capital structure. Moreover, cost of debt is managed collectively for most segments, except for Sonai Sierra and NOS. Using specific WACCs, we calculated the contribution of each business, resulting in a final price target of €1.25. This value considers adjustments which can be seen in detail in the table on the right. Now, Mafalda, can you tell us how Sonai's green financing policy creates value?
Well, Henrique, by introducing Sonai's ESG policy in the valuation, we achieved a cost of debt reduction of 60 basis points, translating into a terminal WACC of 6.05% for the conglomerate. This contributes with 9 cents to our price target, further emphasizing the benefits of a green strategy. Now, you may ask what Sonai's financials look like. Well, profitability is one of the company's strengths. In 2019, Sonai reached a cash flows from operations to sales ratio of 11.1%, an increase of 78 basis points year on year, exceeding by far the peers average of 6.8%. This capacity to generate cash flow comes with an impressive liquidity, given the negative cash conversion cycle of -42. 8 days better than the peers median, mainly driven by Sonai MC's market position. We expect the free cash flow to the firm to increase at a 4.7% CAGR, reinforcing our belief that the company will be able to sustainably distribute dividends at its target dividend per share growth of 5% year on year. Through Sierra's capital recycling strategy, Sonai has been reducing its invested capital. This decrease, along with a better operational performance, is expected to set Sonai's ROIC at 5.7% by 2027. As expected, an investment in Sonai will be exposed to some risks.
1 minute.
First, it's relevant to explore the possibility of COVID-19 effects persisting for a long period. Sonai's balanced portfolio between cyclical and non-cyclical businesses is a mitigant to this risk. Then, and despite being a diversified conglomerate, the turnover concentration in Portugal heavily exposes the company to the Portuguese economic conditions. Overall, the diversified nature of the portfolio, with synergies between the segments and its brands, lead to a strong cash flow generation. These, together with a clear focus on sustainability, should allow the company to create sustainable value for all its stakeholders. Thank you for your attention. We now open the floor to questions.
Can I start this time?
Yes.
Okay, sorry, I have 2 questions. The first one is, why should an investor buy Sonai? What Sonai has to offer to an investor? What would be the key buying point for you, for an investor to buy Sonai shares? Well, apart from the upside to the target price, because target prices, we can do whatever we want with them. Apart from the upside to the target price, what would be your key buying point for Sonai? That is the first one. And the second one, have you considered to apply an holding discount to Sonai? These would be my two questions.
Well, thank you for your question. So first, the main reason why we believe that an investor should buy Sonai, it's because of its diversification. So the holding is very diversified. It's present in 8 business units in several industries, and therefore an investor by investing in Sonai diversifies its risk exposure through various industries.
That goes against portfolio theory, because I can do that for myself. Myself as an investor, I can diversify not only by 8 business areas. I can diversify by as many business areas as available shares in the market.
You're absolutely right. However, we believe that Sonai, given that 70% of its value comes from a non-cyclical business, not only an investor will achieve diversification, also through periods of increased risk like the COVID-19 pandemic, the company still remains with strong cash flows. And also, we have to mention the ESG factor of Sonai, that of course an investor can diversify its risk by investing in multiple companies. However, by investing in Sonai, an investor will also be investing in a company that is heavily invested in ESG practices and creating a positive impact for all stakeholders. And I think Guilherme can now explain to you the conglomerate discount.
But if I can just add something, the fact that the holding company controls the debt, so the debt structure, the capital structure of the firm, that might also create some synergies that come from diversification. So we believe that that's an extra point for the conglomerate. Regarding the conglomerate discount, yeah, we applied a 20% conglomerate discount. But why, right? So in some literature, we saw that for Western European conglomerates, usually market analysts that apply these kind of discounts, the discounts range from 5 to 20%. We wanted to be conservative in our approach. We did it throughout the valuation. And so that we decided to apply a 20% discount rate, 20%, sorry, conglomerate discount on the company.
If I may add, we also applied sensitivity analysis to evaluate the conglomerate discount, and our recommendation holds.
Okay, that's fine. Where is I did not find the conglomerate discount in the presentation.
Okay, it was in the adjustments, right?
It's on the adjustments table on your right.
Exactly.
Okay, perfect. Okay, I have no further questions.
Can you elaborate on your approach using market multiples in valuing Sonai?
Yes, so our base case only includes relative valuation for the 3 smallest segments, Sonai FS, IM, and ISRG. However, we did do a multiple analysis on all the segments, and the values are very much in line with our DCF approach. Perhaps, yeah. So as you can see, for instance, we've applied, we did a sum of the parts relative valuation, but we also applied a relative valuation on Sonai directly to their consolidated statements. However, we believe this is not the best way to capture Sonai's value through a relative valuation, because we are lacking things just as the participation in NOS, the fact that they're ESG focused. So these are things that are not captured by the multiples, and so we think that that's not an appropriate approach and does not reflect the true value of the holding.
Thank you.
Okay. Hey, I have a few questions, okay? So the first one, you mentioned that the return on invested capital is around 5%. Okay, do you think this is acceptable? Do you think that this is something that over long term makes sense for an investor to be exposed?
That's a really good point. So we believe that even if the ROIC was below the WACC, the fact that the capital recycling strategy of Sonai Sierra is ongoing, and in this case we see that they are just increasing the asset management side of it, so incrementing the return while not increasing the invested capital. Also, Sonai MC is opening new stores, so proximity supermarkets, through a lease operation, so they are leasing those spaces, and that also will contribute will not contribute to an increase in the invested capital. So in that point, we believe that the company will be sustainably increasing this ROIC.
And also, if I may add, if we also look at the WACC, so through periods that we live right now with current low yields, we believe that the WACC for Sonai will remain low for the future, at least for the foreseeable future. And also, given that Sonai manages debt collectively and is able to achieve a low cost of debt, we believe that this also will contribute to a low WACC and in turn make the return on invested capital above the correspondent WACC.
Okay. My second question relates to the holding discount. Okay, it's a theme that it's important for a company like Sonai. So historically, the value of the assets probably didn't change much from the one you calculated in your presentation. Okay, so historically, the shares traded at a much bigger discount to the NAV than you are applying in terms of conglomerate discount, okay? So why do you think that is the case? And what do you think it will change in the future that will allow the conglomerate discount to drop from probably something between 40 and 50% to 20%?
That's a great question. So we apply this conglomerate discount also because other equity research is public ones that analysts were doing on Sonai SGPS. We're also applying this 20% discount. We believe that was amongst the consensus. Regarding the second part of the question, can you repeat, please?
Sorry. You didn't answer the first part yet. Okay.
Yeah.
Why
the 40%, right?
Why historically the shares traded at a much bigger discount than the one you are using? Okay. And then the second part is, why do you think that will change? Why should I buy Sonai? Because that basically implies that the discount to the value of the assets will drop. Okay, why will it drop?
That's a good point. We also believe that, for example, the price might increase because of ESG investors, for example, institutionals that are every time more prone to this kind of approach and these kind of companies that are following these targets. The price might increase, not changing the values of the assets, but that might reduce the conglomerate discount. And also we're seeing that the company is following a strategy of trying to make it less complicated, the conglomerate that they have. And we believe that that might also contribute to a decrease in that conglomerate discount. Okay.
And my third question, okay, I think that your analysis of the potential impact of raising debt to green bonds was quite interesting. But do you think that over long term this is sustainable? This gap between the social responsible companies and those that are not?
Sonai has already focused on the environmental and the social. In this table, we can see a couple of actions that Sonai followed in 2019. And Sonai reinforced its commitment through the reinvestment in ESG bonds. These ESG bonds allow Sonai to turn into an obligation all the ESG and all the practices that the company already has in the environmental and social focus. And we believe that Sonai is in the front of these steps. It is the first Portuguese company investing and refinancing its debt through ESG bonds.
And if I may just complement, this that Margarida said is the most important point. Sonai, in this case, is a pioneer. And while this gap, as you very well mentioned, may not last for a very long time, the fact that they were the first ones is very important to lead the game.
Mm-hmm. Okay, that's it for me. Thank you very much, and congratulations.
Thank you.
Thank you.
No more questions? Okay, it seems that way. Anyway, there is only more 5 seconds, so I think it's done. Thank you very much for your work.
Thank you.
Thank you. Thank you.
Thank you, everybody.
Thank you.
Thank you.
Thank you.
So,
Congrats.
you know, you have 10 minutes. When you begin to talk, I press the button. Okay. Good luck.
Thank you. Good afternoon, everyone. My name is Jan, and together with Christian, Bernardo, Bernhard, and Giovanni, we are delighted to guide you through our analysis of Sonai today. Based on the closing share price as of 31st of December 2020, we issue a 12-month target share price of €1.05, which translates to a 59.1% upside potential. We therefore issue a strong buy recommendation for Sonai. Now, looking at the historical share price development as well as our valuation range highlighted in light gray, we would like to point out that all of our valuation methodologies yield the target prices above the current share price, therefore implying upside potential. My colleague Christian will talk more about this later. Now, breaking down the operations of Sonai, the company operates about 8 different business segments. On the one side, there are the retail divisions, namely Sonai MC, Wharton, ISRG, and Fashion. On the other side, Sonai Sierra operates in real estate, Norsh is primarily active in telecommunications and media, and financial services as well as investment management cover the payments and investment industries. Now, without going into too much detail here, we would like to point out that the retail divisions showed on the right-hand side account for about 95% of the total group's revenues. And thereof, Sonai MC, as the market leader for food retail in Portugal, has the largest stake, mainly through its well-known brands such as the Continent supermarkets. I would now ask my colleague Bernhard to give us some more detail.
Thanks, Jan. In order to forecast the financials for each segment as accurate as possible, we put special effort into the upcoming market developments and trends for each division. At Sonai MC, we expect an increase in internal efficiency consisting of like-for-like growth coupled with cost optimization within the stores. We also recognize innovation in form of an agile digitalization concept and an increasing food e-commerce business where we continue to see MC as the leading player. Further revenue trends and drivers of all divisions were quantified and embedded into our financial model, which is further discussed by my colleague Giovanni.
Thank you. As Bernard said, the key drivers of growth are part of our financial analysis, in particular our turnover forecast. Looking at that, we expect that in 2020, the group will reach a 7.9% growth in terms of total revenues. That is mainly due from the positive performance of the main business segment of the group, meaning Sonai MC. Looking to the future, we expect the group to still experience a path of growth, and we estimated a compound annual growth rate between 2020 and 2025 that is around 5.5%. Considering the EBITDA margin, what we can notice is that as of today, the group can count on a higher level of profitability of its operation when compared to its peers. Looking to the future, we expect a slight erosion of this margin due to the increasing competition in the main business segments in which the group is today operating. Considering the ROE instead, what we can notice is that the group in 2020 achieved the all-time low ROE at 2.3% due to the all-time low net income margin. However, we expect that the group will faster recover from this situation as in 2021, most of the business segments of the group should return to a condition of profitability. Looking to the future, we expect the ROE growth will be driven by 2 factors, one being the total asset turnover that reflects the increasing level of synergies between the different business segments of the conglomerate, the other being the financial leverage. However, the increasing financial leverage does not depict an unfavorable condition for the group. In fact, the capital structure of the group appears to be quite solid and conservative. First of all, the group has been putting an effort on increasing the maturity of its debt, therefore reducing one of the most important sources of risk in debt financing, the short and frequent repayments of debt. Then, if we will compare the capital structure of the group to the one of its peers, what we can notice is that the one of Sonai is actually more conservative than the one of its peers, and moreover, the liquidity condition that in this case presented by the time interest earned depict a condition in which the group has no any trouble in matching any short-term liability. Chris, the floor is yours.
Thank you, Giovanni. So we derived our final target price from 3 different valuation methodologies, being the income-based method, where we performed a discounted cash flow analysis, 2 market-based methods, namely comparable company analysis and precedent M&A transactions, as well as other valuation methods. The DCF model was implemented for the following divisions: Sonai MC, Wharton, Fashion, Nosh, and FS for the period that goes all the way until fiscal year 25. For Sonai Sierra, ISRG, and IM, highlighted in yellow, valuations were carried out by using other valuation methods. The final combination of the DCF model and the equity values of the remaining divisions led to a share of 8 cents and can be seen in the waterfall chart below. Now, looking at the comparable company analysis, which supports a price of €1.10 in the base case, which implies a premium of around 67%. The valuation was based on an EV to EBITDA multiple. For the considered segments, at least 4 different companies were selected based on criteria related to their business activities, financial performance indicators, and strategic orientation. Now, the final target price of €1.05 was derived from the DCF analysis, market-based valuation using columns and precedents, as well as a dividend discount model. The price ranges can be seen in the football field chart to the left. The final target price is a result of a weighted average of all valuation methods. We allocated here the most weight into the DCF analysis, as it allowed us to put a greater level of detail and our own understanding of the overall environment into the model. Now, finally, as introduced in the beginning, all valuation methodologies, even considering only the bear case scenarios, point towards an upside potential in the share price. Bernardo, please go ahead.
Thank you, Chris. Now, moving to our investment risks section, the outlook is far from certain for Sonai. As the overall macroeconomic environment ebbs and flows and industries transition to the new stage of growth, Sonai will have to adapt to thrive in this new status quo. Accordingly, we identified risks stemming from the market, from the regulatory environment, and from the firm itself. Starting with the former, our first concern relates to Sonai's overexposure to the Portuguese market in the context of the COVID-19 pandemic, coupled with Portugal's shoddy track record of economic recovery following major shocks, taking the last financial crisis as an example. Now, history does not always repeat itself, but it is a fine indicator to keep an eye on. Additional risks of no less importance, mind you, include the loss of prominence of physical retail vis-a-vis online retail, the execution of the 5G rollout, the significant investment needs of most of Sonai's divisions going forward, and some governance concerns. I would be happy to develop on these during the Q&A. Moving on to the ESG arena, an increasingly important bellwether for investors. Here's where things get exciting for Sonai. Let us then start by tackling the first 2 letters of the moniker, the environmental and social components. Here, the company has adopted a structured and ambitious long-term approach to balancing its relationship with society. It involves the operational side of the company, as laid out by a 5-pronged plan consistent with 2016's SDGs, and the financing side of the company, through the issuance of debt tied to green and ESG metrics, with around 9% of total debt now linked to such instruments. On the governance side, we looked at the good, the bad, and the ugly. And the overall picture is certainly positive. The firm abides by most best practices, namely in terms of board members' election, profile, and compensation, topped off with an exemplary attendance record for board meetings. This view, however, is nuanced by some generally undesirable characteristics, chief among which the Azevedo family's outsized influence in the boardroom. To this point, we add director overboarding and at times opaque capital allocation and disclosure strategy, and some in the below par level of independent directors. Regardless, it is our opinion that Sonai is well ahead of the curve in ESG performance. This is consistent with external rankings, which position Sonai as the country leader locally and the sector leader globally. Bernie, take it away.
Thank you, Bernardo. Finally, reasons why we see such huge upside potential. First, when you buy Sonai, you may just buy a single share, but get a well-diversified company with a broad business portfolio with 8 different companies and revenue streams. Second, you directly participate and benefit from the fast-growing online retail trend. MC alone claims around 70% of the Portuguese food e-commerce market. Next to point out is the excellent position Sonai holds in ESG-related topics that is increasingly important for investors. My colleague Bernardo already pointed out the pioneering role Sonai has in Portugal and sets a high standard for the whole industry. And last but not least, the fact that Sonai has been able to increase its dividend by 5% year by year since 2013. We expect this growth to continue in the future. To sum it all up,
1 minute.
Since all valuation models have an upside potential and a Monte Carlo simulation confirms these results, we are quite confident that the fair share price should be around €1.05. Thank you very much, and we are happy to answer any question.
Can I start?
Sure.
I wonder if you can give me two measures that Sonai could adopt in order to accomplish the following objectives. The first one to unlock value from the obviously discount that is implied in the sum of the parts, and the other one regarding the ability to improve even further its ESG profile. So two measures, one trying to solve each issue.
I can take the ESG one, and then someone else will take the other one. So on the ESG concerns, I think it really relates to the additional concerns that we mentioned during the presentation. So putting aside the SVED family conundrum, and perhaps going at the director overboarding phenomenon. So basically what happens is that 6 out of 10 of Sonai's directors currently hold more than 5 board level positions in companies outside the Sonai group, which is certainly not ideal. Even without accounting for any additional professional or institutional responsibilities of these individuals, juggling more than 5 director mandates would pose a challenge for the deftest of individuals. And as such, it would probably be in Sonai's interest to implement a limit, a restriction on the amount of board positions that current board members can take in outside companies. Secondly, it would be, from an ESG perspective, we have identified an issue relating to the holding structure, in the sense that the company's current intricate holding structure presents a challenge in assessing specific, rather than aggregate, capital allocation decisions, and by association, facilitates the existence of potential pet projects. To give you an example here, take Jornal Público, whose mention cannot be found in Sonai's annual report, but is nevertheless part of the group through Sonai.com. Results regarding Jornal Público's performance, even looking at Sonai.com's specific disclosures, are scarce and vague. And though they certainly point towards it being a consistent cost center rather than a profit maker. Now, the strategic rationale for such an investment would elude the scrutiny of investors given the current availability of information. So, a better disclosure policy across the business, namely relating to capital allocation decisions, would certainly help in this regard. So those are 2 measures relating to ESG. I'm not sure if anyone else would like to take the other one.
Yeah, sure. By linking to what you say, Bernardo, I think that the most important reason why today the group suffer from a conglomerate discount in the market is mainly due from the opposite of information, due to the information asymmetry that we can see in the market. And this is mainly due because we are talking about evaluating a conglomerate, and can be hard to understand the connection between the different business segments. I think that the group so far has been putting a high level of effort on increasing the relationship with its shareholders, if we think about the initiatives of Capital Markets Day, to get closer to them. At the same time, I think it's important that in financial disclosure, as Bernardo was saying, it's important to highlight the smaller business segments of the group and their performance, and moreover, it's important to include some analysis that can point out how is important and relevant for Sonai the high level of synergies between the different business segments. And in particular, looking to the future, the access to the e-commerce and the leading position of Sonai can increase even more these synergies between the group, therefore increasing the presence in the market and increasing the loyalty of customers.
Thank you.
Hi. So if I may, 2 questions, okay? The first one, how does it compare your valuation of NOS with the market value of NOS, okay? And do you think that this stake within Sonai is worth more or less than if it was given to Sonai shareholders?
Maybe I can ask this question. So our valuation of NOS actually exceeds the share price that we can see right now for NOS. So right now NOS share price is around €2.70 when I checked last time today, and we have a value that is close, like above €4 actually. So for that, we still believe that the share price of NOS is right now currently really low, especially due to COVID. NOS suffered quite hard and couldn't ever recover since, even though they have good performances in many segments, but the cinema and audio visual line is still heavily impacted. So, and that's why the shares currently really below the value they had before. Yeah, and to answer the second question, I would say Nosh is a bit outside of the range that Sonai has with all these other brands. So they are mainly focused on retail, and Nosh from the telecom industry is not fitting in there as well. So we can't see the synergies between these different companies like we see in other brands. So we believe even though Sonai increased their stock of Nosh in the past, we believe that it's probably better to or it would better for the shareholders to get the money paid out that Nosh is currently worth.
Okay. Thank you very much. And my second question relates to retail. Okay, the bulk of the value comes from an operation that is 100% Portuguese. Okay, do you see room for further growth in the future in the Portuguese market?
So if I may take over this question. So when we look at the especially in the food retail market, we saw that we compared it to different countries within Europe and saw that the market is relatively underpenetrated in terms of the number of stores per inhabitants. So we still believe that going forward into the future, and also looking at the published targeted number of stores that Sonai wants to publish going into the future, we believe that there still will be growth in the Portuguese market, yes.
Okay.
If I may add something on that, I believe that there is still also a room for improvement and growth coming from the e-commerce. We know that the Portuguese population still rely more on physical shopping, and this was highlighted even during lockdown. If we think about the percentage of revenues of Sonai MC from online over the total, the percentage is still around 2% and didn't vary much during the lockdown. What we believe though is that the market expect a higher level of penetration from the Portuguese population in the e-commerce, also in the food and personal care segments. And therefore, Sonai MC has been present in the online platforms in 2001, as today the leading position for the food products. So we believe that in that case, Sonai MC can still take some advantage from the growing e-commerce market in Portugal that has been displaying some kind of delay in participation from users.
Okay, thank you.
Hi, good afternoon. Two questions from my side, if I might. The first one, looking at the presentation, is not completely clear for me whether you consider or not any conglomerate discount. And the second one would be, given this is a company with different business areas, but also considering this is a family-owned company, therefore unlikely to be taken over, what would you recommend as analysts for the company to unlock the value of its subsidiaries? This is a bit of what Christina asked, but in a different way. What could the company do to unlock the value of its subsidiaries? Considering that it is unlikely, as I said, that the Azevedo family gives up the control of Sonai.
Sure, I can start from the conglomerate. We can go first to the bridge graph. We can notice that we included a conglomerate discount of 10% for Sonai as a group. And I mean, the financial literature and industry tends to agree that—
I'm looking at the page 11 of the presentation. Where is that reflected?
Yeah, if you, in the bridge, there is a conglomerate discount. Jan, if you can go back.
Yeah.
Yeah, conglomerate discount of 241 million. Yeah.
Yeah, which
exactly.
represents the 10%.
Represent the 10% of the equity value. What
your price target in the page 2, it's 105.
Exactly.
Sorry, time out. Sorry, it's done. Thank you very much.
Thank you very much.
Okay.
Good work.
Thank you, everybody.
Thank
you.
Thank you.
Thank you. Congrats. Thank you very much.
Thank you.
Good afternoon. We are delighted to be presenting our recommendation on Sonai SGPS, a multinational group that operates in more than 60 countries and numerous sectors. My name is Joana, and today I'm here with Carla, Claudia, Luis, and Maria. We issue a buy recommendation with a price target of €2 per share, which represents a 203% upside potential relative to the closing price of 67 cents per share on the 30th of December of 2020. We reached this value after identifying three main value drivers of Sonai: the leading position of Sonai MC in Portugal's food retail market, the further consolidation of core retail competencies, though maintaining a diversity of businesses where innovation plays an important role, and environmental and social responsibility at the forefront of the group. We will start our presentation with a summary of the Sonai's businesses and the industry overview, followed by an analysis of the ESG practices of Sonai. Next, we will present a financial analysis and describe our evaluation of the group. Sonai SGPS manages a diversified portfolio where the food retail sector is the most important one, since Sonai MC is the market leader in Portugal, and also runs specialized retail businesses which aggregate Vorten, Sonai Fashion, and ISRG. Additionally, the portfolio is extended to shopping centers and telecommunications through Sonai Sierra and Nós, and is also present in the financial services through Sonai FS and in the investment management through Sonai IM. Now I'll pass the word to Carla.
Thank you, Joana. Now, regarding the industry overview and considering indicators that influence economic growth, and before the COVID-19 pandemic, the Portuguese economy was performing strongly in general terms. However, in 2020, the economic activity was profoundly affected by the pandemic all over the world. According to Banco de Portugal, which is the entity producing the projections we present here on the slide, it is assumed that the restrictions will be gradually removed from the first quarter of 2021, although it is believed that activity will be conditioned until the beginning of 2022. Additionally, by the disintegration of private consumption, it is noteworthy that the spending on non-durable goods showed greater resilience, reflecting the impact of an increased demand for food products. So, business like Sonai MC are benefiting from the pandemic crisis, while others are still suffering. Now, focusing on the main business of the group, the Portuguese food retail, it is a mature market with various players, but high market concentration. More than 50% market share belongs to the two biggest players, being Sonai MC, the number one player. Additionally, this market is highly competitive, which can be confirmed by the increasing number of stores opened in recent years, as well as the arrival of new operators to the market, such as Mercadona. But although this intensification in competition, Sonai MC continues to reinforce its position as a leader in the Portuguese food retail market. A major threat we found on this market is that the customer tends to be slightly unfaithful to a retail distributor, making purchases in several supermarkets and taking advantage of each chain discounts. Still, we believe that this has been changing because of the loyalty programs, such as the Continent card in the case of Sonai MC, that have increasing lately and make the customers more attached to a retailer. Additionally, Sonai MC has tried to differentiate itself in recent years through Continente Bom Dia, which is a modern proximity format with strong potential for additional growth, but also through the electronic commerce, where Sonai MC has a market share of 70% and double-digit sales growth. Now, Claudia will continue by presenting to you the ESG practices.
Thank you, Carla. Sonai SGPS is a family-owned business with a Azevedo family holding 53% through Evanor Investimentos. Its board structure is composed by 10 members, with 2 executive directors and 8 non-executive directors, of whom 40% corresponds to independent members and 30% to women. Sonai follows a one-tier governance model in which the management structure lies in the board of directors, and the supervisor structure includes a statutory external auditor and a statutory audit board. Besides, it also has some specialized committees such as finance and audits, remuneration and nomination. Overall, this model is in accordance with the best practices and goes behind the recommendations, guidelines, which contributes to create sustainable value. When it comes to the environmental and social responsibility, Sonai has a strong commitment with these issues, relying in 5 strategic areas. The first, CO2 and climate change, aiming to reduce CO2 emissions by 54% in 2030 and to be carbon neutral by 2040. Plastic, joining to some foundations and aiming to include exclusively reusable, recyclable or compostable plastic in the private label packaging by 2025 and to incorporate 30% recycled plastic into new plastic packaging. Nature and biodiversity, implementing several initiatives to protect resources and the nature. Community support, being, for example, Active Share Program, one of the images of these commitments. And finally, equality and inclusive development, relying on 3 main goals: promote gender equality, promote continuous learning, and foster the work-life balance. However, it should be noted that these are just some of the Sonai's goals in that field, being undeniable the importance of these issues in its strategy. Now, Luis will continue.
Thank you. From 2017 to 19, Sonai's GPS has shown an EBITDA growth trend with a CAGR of 35%. Concerning Sonai's different business segments, it is evident that Sonai MC accounts for the most part of the group's profitability, followed by Sonai Sierra and Vorten. Relatively to financial strength, the group is reducing over time its indebtedness. However, this downward trend might be broken in 2020, which can be attributed to a liquidity reinforcement due to the COVID-19 pandemic. Although the company says that do not have debt reduction targets, we still think this might be an underlying objective, and it will continuously try to deleverage its balance sheet. Therefore, it is noteworthy the decreasing values of the net debt over EBITDA ratio, showing the strengthening of the group's financial position. In terms of profitability, and from 2017 to LTM, Sonai MC has shown a turnover growth trend with a CAGR of 7.6%. Gross, EBIT and EBITDA margins are very stable, even in these current abnormal situations, which may represent a positive outlook for the future. Besides, all these figures are above its main peers, showing efficiency and leadership in this matter. When it comes to productivity, Sonai MC presents overall, in 2018-19, a fairly stable cash conversion cycle. Also, as we would expect to see in a mature company, total asset turnover barely moves. Regarding the valuation, due to the fact that Son is a conglomerate with a variety of businesses, a sum of the parts approach was computed to accurately predict the group's intrinsic value. We used both a DCF and a comparable company's valuation for Sonai MC, because since this is the most expressive segment, it is imperative to obtain a more detailed valuation. For Sonai Sierra, NOS, Vorten, Sonai Fashion, Sonai FS, and ISRG, we resort to a comparable valuation, since it provides a good reflection of the market's perception. Finally, for Sonai EM, we use the net asset value approach. We point out that for these last 3 segments, we use the values reported by the group, since little public information is disclosed. Now I'll pass to you, Maria.
Thank you, Luis. Considering the valuation of Sonai MC, we use a discounted free cash flow to the forecast sales. We also use the sum of the parts approach in order to differentiate the 3 segments of the company. For the most important segment, the supermarkets, that contributes around 50% for sales, we assume that it will grow in the next 3 years due to the company's objectives in terms of new openings. And after this growth, it will decline because of market saturation. Regarding the hypermarkets, we forecast it will only grow like for like, so we don't predict new openings in the future. And for the segment that shows historically a faster growth, the new growth businesses and other, we expect it will continue its exponential growth in the next years. Additionally, we estimate the like-for-like growth for each segment, keeping in mind not only the historical values, but also the forecast for private consumption and GDP growth that have shown to be correlated with the growth of both supermarkets and hypermarkets. As a result, we got a 7% CAGR for supermarkets, 2% for hypermarkets, and 15% for new growth businesses and other. As for the EBIT margin, we estimate it will be in line with historical values due to its stability and because we believe that the company will maintain its position as a market leader with a great cost efficiency. We reached these values for the free cash flow to the firm, and after using a WACC of 7% and a terminal growth rate of 2%, this method led to an enterprise value of 2,897 million euros. After estimating either the enterprise values or equity values for all the business segments of the group, Sonai SGPS, we got this final equity value. And as a conglomerate, we expect that some trades are traded at a discount. So we defined a 20% holding discount that allow us to reach a final share value of 1.82 euros. In conclusion, given these drivers, we expect that the market is undervaluing the group. So our recommendation is to buy its shares. Thank you for your attention, and now the floor is open for questions.
Hi, good afternoon. If I may, a clarification more than a question. What is your price target for Sonai? Because I see, let me see if I'm not mistaken. Okay, you say it's 202, but I believe I saw somewhere another value.
Yeah, thank you so much for your question. After we send our report, we noticed that we have mixed the concept of share value and target price, as we considered the target price our share value on the date of the valuation. So after realizing it, we have decided to change it and calculate the true target price, that is 2.02 euros.
So from what I understand, the table, so in which tables could I see that value?
But in the presentation or in the report?
In
the presentation, we only have the value, the final value, but we computed as the share value multiplied by 1 plus the cost of equity minus the dividend per share. The share value considered 1.82.
Okay. Okay, that's okay. Okay. This is an academic competition, but if this was for real, you would be grilled with this. But okay, that's all from my side. Thank you.
Can you, you mentioned the holding discount of 20%. Can you elaborate on one measure you would adopt in order to reduce this holding discount? And this is my first question. And the second question is regarding the ESG analysis that you made to the company. What suggestion would you give to Sonai in order to improve its ESG profile?
Thank you for your question. We consider the literature average value for this holding discount and the values that the group revealed to be the analyst estimates. So we define a 20% holding discount that not only combines the effect of being a conglomerate, and for that its value is not equal to the sum of its parts, but also because this group in particular has a shareholder structure with the majority of the stakes being controlled by Azevedo family.
So what measure would you recommend to the company in order to reduce this discount?
Maybe I can help Luis. One measure that we think that might be applied is the further consolidation that we mentioned that is being made. We know that these holding discounts are because investors think that the diversity of businesses are too wide, and because they don't expect that the company will be so doing such a great job in all of them. So we think that for the consolidation that we are seeing the Sonai SGPS doing might reduce this holding discount in the future.
And regarding the ESG question?
Can you please repeat the question?
what measure would you recommend to Sonai in order to improve its ESG profile, besides what they are already doing?
That's a complicated question because Sonai has already made a lot of things in this, in what comes to the ESG practices. That is like a little bit complicated for us to tell something that they could done that came additionally that they could done more. So I don't know. It's a little bit complicated to find something.
Okay, thank you.
My colleagues have something to say. But
Can you hear me?
Yes.
Yes.
Okay. Yes. So thank you very much.
Sorry, we are not hear you now.
Não estamos a ouvir o Felipe.
E agora?
Sim.
Yeah.
No, it's okay. Yeah.
Okay, thank you very much. Asking about NOS, how do you value NOS and in your sum of the parts? Sorry, if you could just come back to that, and how does it compare with the market value? Okay, and okay, so coming back, so it would be interesting to see how it compares with the market value of this stake. And how do you think Sonai could create value with this stake in NOS? Okay, that's my first question. My second question relates to the two valuations that you presented, okay? One returns an equity value of 4.5 billion euros, and the previous one that you show based on free cash flow, I think that it shows something like 1.2, okay? Why do you think there's such a big gap? If I'm an investor, why shouldn't I look to this one, 1.2, which is much closer to the valuation of the company? Thank you.
I'm sorry, for the first question, you asked for us to explain why do you think, how Sonai, how do you think that Sonai is creating value through NOS, right? I don't know if I get it right. I got it right.
You are in mute, Flip.
Okay. So I explained myself poorly for sure, so I'll try again. Okay. So on NOS, you value the stake of Sonai, okay, at 600 million. Okay. How do you get to that value? And how does that value compare with the market value of this stake, which is listed, NOS, okay? NOS is listed in the stock exchange, okay? So that's the first part of the first question. The second part of the first question is, okay, how do you think Sonai could create some value with this stake in NOS, which doesn't seem to be very related to the rest of the business of Sonai?
So actually for NOS, we resort to a comparable valuation. These were the companies that we chose for this method, and we got to an average equity value of 1.7 billion, which is, I think it's higher than the actual market cap from today, but it's not that different. And this value actually is different from the table that we saw earlier, because in that table we already have the value just for the stake that Sonai SGPS has on us, which is 33.45%.
Regarding to the second part, we think that the main source of value that Sonai can take from NOS is receiving the dividends, and it's that.
Okay, thank you.
And for the other question that you mentioned about this final equity of 4,544 and this one right here, this is the equity of Sonai MC, just Sonai
okay.
MC.
Okay.
So this is
That's
the final with
excellent.
all the, yes, with all the companies.
Okay. But, okay, so what would be the value that we should compare in this sum of the parts with that 1.2?
Excuse me? Which
Okay.
value? It's
It's on
equity?
AMC, it's 1.2, the equity value, right?
Yes.
Okay.
Sorry, time out. It's 10.
Okay.
Thank you very much.
Thank you very much. Thank you.
Thank you.
Thank you.
Thank you so much.
Thank you, everybody.
Thank you, everybody.
Thank you.
Thank you. Congrats.
Thank you.
Thanks.
Okay, so our analyst team issued a buy recommendation because we see a 73% upside potential for the stock. We think Sonai is worth taking a look at for three main reasons. Firstly, it has a strong competitive positioning and an attractive retail outlook in Portugal. Secondly, the company is undervalued. It demonstrated resilience in the crisis due to the non-cyclical nature of Sonai MC, and it offers a very attractive dividend yield in the current low interest rate environment. And thirdly, Sonai's M&A activities focus on capturing the momentum in the retail sector, which is driven by e-commerce and will lead to further growth. But let's start in the beginning. So Sonai is a Portuguese conglomerate that operates across 8 industries. It has a strong focus on retail, and almost 90% of revenues come from Portugal. Because of this, our recommendation is largely based on the retail sector outlook in Portugal, which we consider positive. And here we see 2 main drivers. First one is the economic reopening. Assuming a continued vaccination rollout and tourism coming back in the second half of the year, the consumption will pick up. Second one is e-commerce with great growth potential, which was even accelerated by the pandemic. And Sonai will be able to profit from both retail drivers because it has a multi-channel operating model. They launched a store expansion strategy, investing several €100 million into new stores of Sonai MC, which we will think will help to capture further market share. But at the same time, Sonai made important investments in e-commerce and built up strong platforms, as can be seen with Wharton and Sonai MC. And they also made several acquisitions, which we will examine in more detail now.
To continue, I will outline the M&A activity of Sonai and how this third main reason for our valuation deserves its right to be mentioned here. Firstly, we can see a strong top line and profit-related performance on the left-hand side, with special emphasis on how the EBITDA margin grew in comparison to the CAGR of the revenues, leading to a ROIC of 8.4% in 2019, which is quite impressive in our opinion. This was also enabled by the creative M&A activities, which we show on the right-hand side. Acquisitions and initiatives to partner up with companies dealing with trend products, important to integrate the offering of Sonai's business, enabled Sonai to reach and meet customer needs and improve customer service offerings. Secondly, these acquisitions were one of the channels to increase Sonai's market share besides the organic growth from Sonai SC by opening new stores, for example. We have no reason to believe that Sonai is going to change its strategy, so that we expect further creative acquisitions, but also divestments if business are not profitable to add value. Taking a look at the company characteristics, we want to give a quick overview of Sonai's operational focus. As we can see, Sonai operates across 8 different sub-industries and has 8 business units, which provide the group with a relatively diversified portfolio. Major focus is definitely retail, with the sub-industries of food, fashion, sports, and electronics retail. Especially Sonai MC and Wharton, so food and electronic retail, are most important business units. This is firstly because they account for by far the largest share of revenues. Secondly, because they're market leaders in their respective industry. Portugal, as we can see on the right-hand side on this slide.
Concerning ESG, Sonai has been highly active on the environmental side, and as a result, the Carbon Disclosure Project
has added Sonai to the A list of companies worldwide. In our view, this is seen as a potential positive aspect to create a boost on the environmental score, and the conglomerate also shared the intention of going carbon neutral until 2040, in addition to achieve 100% private label plastic packaging by 2025. Sonai also took the advantage from their investment in photovoltaic energy and was able to sell 46% to the public. And the latest project announced by the company was also connected to the commitment to build the biggest private forest in Portugal. On the social pillar, the group has been highly active on supporting community and hospitals majorly impacted by COVID. And Sonai also has a social initiative called Sonai Active Share, which connects their employees to the society. In December 2020, the company was a pioneer by announcing a new financing strategy amounting 150 million euros that linked bonds with ESG criteria such as female leadership and the reduction of CO2 emissions. And we would like to point out that the issuance of this type of bonds is usually associated with a lower yield of 8 basis points when compared to non-green bonds. And this will definitely reward the company with lower costs of financing. Lastly, on the corporate governance side, it is important to notice that although Sonai is a family-owned business, the statutory board provides additional governance on Sonai's management, amongst other factors. Now we will move on to explain our assumptions on the valuation model used.
Coming to the valuation, since the industries of the business unit of Sonai are very different from one another, we forecast the sales of the firm by doing different assumptions for each business unit. As you can appreciate, the value drivers for Sonai MC and Sonai Fashion is the growth in the store square meters. While for Worten, besides the growth from store square meters, we also considered an extra growth coming from the e-commerce, in which the company is investing substantially. For Sonai AM, the value drivers is the historical average annual return of Sonai AM benchmark indexes, being these indexes relative to tech infrastructure, software, and IT services segments. For Sonai FS, the selected value drivers is the growth in the number of clients of Universal Card, which is the leading product of Sonai FS. And finally, for Sonai Sierra, the selected value drivers is the growth in net asset value. We link the evolution of these value drivers to the CapEx and then to the revenues to be consistent with the logic, more investment lead to higher growth. In the next slide, we can appreciate the overall revenues of Sonai's GPS at some of the parts, and it is clear the growing importance of Sonai MC in the forthcoming years. Between 2020 and 2025, we expect a revenue CAGR of 3.7%. We then decided to use a 10-year annually from 2026 to 2035 to smooth the growth to the long-term growth. Finally, we assume the long-term growth of 2.10%, valuing the outlook of Portugal in next years. Finally, going to the DCF valuation, after having forecast the relevant items being these EBIT, D&A, CapEx, and net working capital, we computed the free cash flow to the firm and the terminal value, then discounted at the WACC that we forecasted. The DCF yielded an enterprise value of 5.3 billion, and through the equity bridge, we obtained an equity value of 3 billion euros, corresponding to a share price of 1.53 euros per share. Then we applied a conservative conglomerate discount of 20%, yielding a fair value of 1.23 euros per share.
To every holistic valuation approach, there's a relative valuation included. In this case, we chose the peer multiple approach and picked appropriate industry multiples like price divided by sales or price divided by net asset value in case of Sonai Sierra. And the most common enterprise value multiple, enterprise value divided by EBITDA. In order to come up with the equity value taken into account the stake Sonai holds in each business unit. This led us to a target price of 126 and 133 using selected multiples and the enterprise value multiple respectively. Again, for both target prices, a conglomerate discount of 20% has been taken into account. Valuation approaches used given as a price targets around 125, which reveals a big upside potential of more than 70%.
Before opening long positions in Sonai, a careful analysis of the investment risk should be conducted. While liquidity trading risk is low and inflation risk is not a major concern as well, market and concentration risk should be monitored. The share can be affected by price losses in times of market downswings, as was the case in March 2020, when global lockdown measures were enforced, or during recent times of renewed lockdown. About concentration risk, there is a high geographical as well as the sectoral concentration at the moment. Continuing diversification job from its retail formats and investing into e-commerce and new countries will be the key to reduce the two main risks discussed. To sum up, Sonai has continuously grown in the past under a constant shareholder structure and leadership of Family Azevedo. Operating income grew sustainably over the years with a compound annual growth rate of 14% from 2015 to 2019, offering an attractive dividend yield of 5.1% as in 2019 in a negative interest rate environment. Thanks to a dynamic multi-channel operating model, Sonai's retail units were able to carry on a large part of the business through e-commerce. The driving force of Sonai's business is undoubtedly Sonai MC, the market-leading food retailer with an extensive market network, broad product range, and online delivery services. We see upside potential for the retail units due to increasing consumer spending and the resurgence of stationary shopping.
1 minute.
Sonai has also increasingly demonstrated a high commitment to ESG in public, as discussed before. Many innovations and projects will be addressed to sustainability, environment, and digitalization. Concerning the latest, we forecast revenues from e-commerce to represent 31.82% of Wharton's total revenues by 2025. I hope that you liked our presentation, and I want to thank you on behalf of the team for the attention and the time dedicated. If you have any questions, feel free to ask, and we would love to find an answer to them.
Okay, if no one starts, I have 3 quick questions. The first one is a bit conceptual. If the stock has such an interesting upside, it's trading on your prices at 0.71 and its fair value would be on the 1 to 0.25 range. What could be needed for the stock to re-rate or to rise to your target price? This would be the first one. The second one, you mentioned that the key driver in retail is the selling area, the square meters per store. What other drivers do you think could affect the revenues of a retail beyond the square meters? And the third one, which is a bit of it's a follow-up to the first one. Or the first one put in a different manner. What could Sonai do to unlock the value of its shares? Thank you very much.
So I think I will start with the very first question. If I remember right, it was what has to happen to unlock the potential to basically reach the target price.
Yeah, they are slightly different. The first one is, why do you think the market is penalizing Sonai, or why do you think the market is not trading close to the fair values of analysts? And if you look at to real price targets, this would also be the case.
Yeah.
And the second one is more, if you put yourself in the shoes of Sonai, what would you do, or imagine you are a consultant to the company, what would you recommend to Sonai do to unlock the value of the shares?
Yeah, okay. I will start with the first question quite practically, because as we see during the entire presentation, we assume also based on the resilience of Sonai's activities in the crisis, but also long-term, because COVID is just basically one short-term effect, and the valuation includes basically the entire future earnings. We think that there's a big part of still uncertainty of how Sonai can really prove this strategy in the long term that it has established now in the recent terms of really keeping the expansion ongoing and showing that it really can do it also in the longer term. And we think, and we are pretty convinced that Sonai can exactly do that in the future. That is not just a COVID effect. And we think that this uncertainty that might cause this current price target not to be reached will be dissolved in the future after the crisis, when it's seen, okay, it's ongoing, it keeps ongoing. So much for the first question. I hope that answers your question.
Yeah, I can take the second one about the value drivers. So yes, for the retailers, we consider the growth in store square meters as the main value driver. but we also consider the growth from e-commerce, especially for Wharton, because that's an extra growth that cannot be captured by these value drivers. But for the retailers, in most of the cases, the store square meters is the main value driver because it's where the value comes. For retailers,
and like in sales per same square meter.
Sorry, can you repeat?
And the like-for-like change in revenues for the same square meter of stores.
Yeah, yes, we consider also that one, but we computed like what was the historical average of revenues per store square meters, and we got an idea of this ratio. Then we assumed this ratio. We made our assumption on this ratio in the forthcoming years, and we used this ratio post multiplied for the number of square meters that we forecasted to find the forecasted revenues. So in this way, we use this value driver.
Okay. If there's no further question at the moment, I would like to continue with the third question, building up on what my colleague Timur said. Totally agree. Our assumption is that the outlook for Sonai is a bit clouded at the moment by the general outlook for Portugal. It is our impression that Portugal is not seen as the most attractive market in Europe at the moment, and that investors might not look for a very attractive stock in Portugal in the first place compared to other economies in Europe. So we think that this is basically kind of like clouding the actual potential that we see. In regards to what could Sonai do to unlock the potential, I personally think that the Portuguese economy will show that they are able to recover from the pandemic. They have shown this before. After the Euro crisis, they very quickly rebounded compared to other countries. So again, as Timur said, I think this effect will kind of like diminish over long term. But I think what a really advantage of Sonai is, which they can really put emphasis on, is their ESG efforts, because Sonai is, I think, the third best ESG score in the PSI 20, and I think that these efforts will be recognized over long term by more investors, which will lead to additional demand. And I think this is something they're really good at already, but still can put more emphasis on in order to be recognized by also international markets.
Okay.
Thank you.
Many thanks.
I would just take the opportunity to make a link to the answer that was given relating ESG, and I was wondering if you have any suggestion to Sonai as to how they can improve even further their ESG profile.
Thank you for your question. First of all, I think I can take this question. I noticed that, for example, the to the list of companies worldwide was a major step for Sonai.
Oh,
but for example,
maybe
there
start
are
again.
On this A list.
Maybe start again. You were cut off. Maybe start all over quickly.
Oh, okay, sorry. Can you hear me now properly?
Yeah.
Okay.
Yeah. If you need, you can close your camera. I stopped the time now, so don't worry.
Okay, maybe it's better, and I'm sorry for the camera.
Don't worry.
But what I was mentioning is that Sonai was announced to be joining the A list of companies by the Carbon Disclosure Project, but this was only on the social pillar. They still have a major step to improve on the environmental side and on the governance side. We think that there might be a little bit of worry by the investors and by the market for Sonai being a family-owned company, as I mentioned as well. And so I don't think we need to shift the management of the company. That you just need to show investors that this fact does not interfere with the performance of the company, which we highly think it does not interfere. So I think, the environmental side and the governance side are definitely the aspects to try to improve.
Thank you.
You're welcome.
Okay. Two questions for me, okay? The first one on NOS. Do you see NOS as having, does it make sense for a company like Sonai to own a stake in a listed company like NOS? You talked about M&A as a way of creating value. What would you do if you were the CEO of Sonai regarding the stake in us? That's my first question. And the second question is related to retail. Do you think that e-commerce for Sonai is a threat or is it an opportunity? Thank you.
Yeah, thank you. Please, Alessandro, please. Okay. Then I will start with the first question because it's I'm super interested in telecommunications. So thank you for that question. I mean, telecommunications also, especially because of the aspect of being listed, I think it has to like a twofold opinion here from our side. The first one is we've seen a lot happening regarding the valuation expectations of telecommunication companies but tech companies in general. I mean, looking at the US, they have rallied the last couple of months with a lot of potential, but since there came some uncertainty regarding the long-term interest rates and inflation, they have quite spunk because a lot of these revenues lie in the future, and well, by applying the this discounted rate, it's quite it's quite diminishing or decreasing the value overall with higher inflation. And we think that this is not really the expectations we have. We do not expect long-term interest rates to increase that much. So that is why we think for Sonai it's very important to basically increase the investment in NOS. It's with all the trends that's coming, 5G.
Sorry, time out. Sorry.
Yeah. Okay.
Thank you very much. Good work.
Thank you very much. Okay, very interesting presentation.
Thank you very much. Thank you, everybody.
Thank you.
To the financial market. Some of the issues of this contest are actually, I believe, a good proxy of the real life. For instance, the limited time you have to discuss, the 10 minutes, because usually the client's attention it's very limited. So this 10 minutes to present, I believe it's something that makes sense. Sometimes you could have more time, sometimes you could have even less than that, but putting a limit, it's good for you to simulate how it would be. Some things of the life in the financial markets, I was suggesting in a private chat that next time we do this at 7 a.m. For you to see how it is in the real life, because in all countries we start very early our morning meetings to have everything ready before the markets start to trade, which depend on the time zones. It's 9 a.m. or 8 a.m. So usually you start working very early. So you had an idea of the stress of preparing documents and models. The only thing left is for you to sample the work hours, but that will come in due time. So as I said, in the name of the jury, would like to congratulate you all for the effort you did. This is a major endeavor for all of you. And in general, I believe the quality of the presentations was good. Everything in life, but general terms, I believe it was good quality presentations. So congratulations to every one of you. And if this is effectively what we want to do for a living, I'd just like to let you one or two words. Firstly, you need to have some taste for markets, past the expression. You need to like this market thing, because the work hours are long and at very odd timetables for us that live in Mediterranean countries. To start working at 7 a.m. it's not natural for us. But so I'd like to leave that word of caution. But anyway, this is a very interesting area to work. Not one, I also be very honest with you, not one with so many working vacancies in Portugal. Unfortunately, it's a sector that's going down, not up, but still lots of very interesting work. The world is expecting you, can move everywhere you want in the world. So, as I said, I'm doing this for 22 years, 11 in buy side, 11 in sell side. And it's something I like to do. The only problem, as I said, is I need to get up very early in the morning, but that comes with the job, as they say. So congratulations to all of you. That's my key message. And all my support to all of you that want to proceed a career in the financial world.
Okay, Jorge, thank you very much. Sandra, do you want to announce the winner?
Hi all, thank you very much for presentations. I believe it were amazing. It has been a hard work for all of you. And now I have the job to announce the winner. And the winner is Católica. So thank you all to your efforts. You will be receiving, all of you will be receiving your certificate by your from your faculty advisor. And I don't know if Pedro, do you want to announce any more items regarding the next step?
No, we can announce also just to say that this is the classifications was really hard, so the difference was really small. We'll receive tomorrow. I expect tomorrow, but eventually on Monday. But I expect tomorrow we'll receive the grade, the scoring, and the comments from the graders to the reports and from the jury for the presentations of today. As again, this is only a challenge, so there are more opportunities during the life for the ones that didn't win, and this is only the beginning. So important is to participate and to win experience and to learn with mistakes. So, and unfortunately we only have one winner it's only one winner, so unfortunately, because I guess the second and the third also are really great teams. So, and also the 4 and the 5. So all of you are doing a great work and with a great effort. For the winners, we'll receive a communication from CFA Institute. We'll announce to the CFA Institute that you are the winners, and so we'll receive a communication for the next step. So we are supporting you for the next phase, and we hope that you qualified in the semi-regional phase. And also, if you need more information, please contact me. That's it. So thank you very much for enjoying, for participating on this year research challenge. Unfortunately, this is not a live presence, so I prefer much more a live event, because this is not good. It's much more stressful, but it's the way it is. So let's hope that COVID goes far away, and in next year we do this a live event as it was on the past. Okay.
And just to add a little one more thing, we will be sharing the contacts of everyone that in somehow contributed to this event, namely the juries and all of the other competitors. And if you need something from our side, namely Católica, to improving somehow your presentation, maybe some guidelines from the jury. So we are here to help you out. Okay, so thank you all. Enjoy. Hope you have enjoyed it.
I forget to mention something with emotion. We didn't have the chance to do this live event, but we record everything, so we will edit all the session and we'll put in our YouTube channel. So when this will be available, I will send you an email to inform you. Okay. So again, congratulations to the winners and see you soon. Bye.
Thank you.
Thank you.
Bye. Thank you.
Bye.
Thank you. Bye.
Bye. Thank you.
Bye.